Hi, Jonathan York from IRG BOP, looking at the events over the last week. Domestically, that's been dominated by Telecom and Nuplex. Nuplex in the news after the Securities Commission decided to issue charges against the company relating back to the potential breaches over its banking covenants, which is over 12 months ago now. Shares are currently trading around $3.35. Has seen some selling pressure out there, and the guidance hasn't really changed. They're still looking for increased performance over the next 12 to 18 months, and under the current guidance, these shares would appear to be a reasonable buy at any sort of dips. Elsewhere, we've seen Telecom with a revised profit downgrade. That has put the shares under further pressure. But with a current dividend of 24 cents, the gross yield on the shares is just over 11%. Gross yield is the if you like, the interest that is being received from the shares on the purchase price. If that dividend is cut to 16 cents, as many analysts forecast, you will still be seeing a dividend yield of around 7.8%. So it's still quite a good dividend yield, and compares very favourably with current bank rates. Globally, we continue to see steady growth coming through. The Chinese growth issued this week was quite outstanding. It was over 12% year on year, with an inflation rate of just over 2%. Compare that with New Zealand, we'll be lucky here if you get about a 2.5 growth for the year. And there is some worries out there that China is overheating, but at present that doesn't appear to be the case with the inflation rate. In the US, you've seen continued growth coming through as well as we start to see the reporting season in the US. These are the major US companies are reporting their 3-monthly earnings. So far, we've seen about 33 companies have released their earnings for in the S&P 500, and they are expected to show an increase of between sort of 10 to 15% from the previous quarter. So there's good growth going forward. The major issue for investors is that stock markets around the world are reaching multi-month highs. New Zealand, we're on a 19-month high. In the US, we're on a 22-month high. The US, we're at levels we haven't seen since the collapse of Lehman Brothers. And that's making investors a little bit wary about buying at these current levels. Looking for a pullback. The issue is that if you don't see the pullback, then investors will eventually lose a little bit of patience and will rush into the market, so you expect to see some further gains made on these equity markets going forward. Domestically as well, we've still got the Kiwi Bank preference shares. Those close on the 30th of April. So get your applications through for those if you haven't already sent them in. You can call us on 0800 867 323 for further information on that deal, or go to the website www.irgbop.co.nz. Disclosure statement available on request, and we look forward to speaking to you soon. Thank you.